ลับเหลือเชื่อมากไม่คิดว่าจุดด่างดำบนใบหน้าจะจางลงได้ค่ะ
L'Oreal Paris Glycolic Bright Serum
had several roles and she never had equal opportunities of being promoted, and she had the same job and yet not paid the same way as men. So largely I think women are feeling like, hey, this is getting too tough, having to justify myself all the time. Maybe I should find something out there for myself.
And we've seen some of the data that you've been showing. Australia, India had the lowest representation of women in leadership. Singapore is a little bit better than the global averages. Are these sort of more of country-specific sort of problems, or are you seeing something that's very similar in all of these sort of countries?
I think globally we're still seeing a consistent trend of female being underrepresented. Globally, 3 out of 10 of female are taking on global leadership. And we have data that shows that there's evidence that shows that men are 33% more likely to be promoted. And so we do have a real problem there. And I think it's very real. Women sometimes feels like they need to take time off to take care of their family, their parents, and then they feel guilty about coming back to work, and then their projects could be taken away from them, or they feel guilty about staying home because work is left behind. So there's this dilemma that's constantly challenging women. And the fact is, we need to normalize some of this, that flexi working is okay, taking time off is okay, and that career breaks is something that is very real.
Yeah, Fiona, I wanted to take the premise too of that. I mean, the fact that you have at least the possibility that, in fact, women are leaving because of the lack of opportunities or even the lack of flexibility, let's put it that way to use your phrase, within big corporates, and they're going to do their own thing. What does this say about big corporates then? Do they need to be more flexible in accommodating, of course, all these other things, of course, that women need?
I genuinely believe that if corporations are serious about this, retaining some of their top talent, and we do know that 50% of the women make up the talent workforce today. And if organizations are really serious about retaining some of this top talent, and women do make up some of their top talent, and if they're serious about retaining them, they have to do something to address it. So some of the common practices including flexi work policies and being very conscious about their unconscious bias, being very intentional about what are the programs that you can put in place to help women lend their voice. I think there's so many things that organizations can do to help retain women and really help them to go further in their career.
Let's look at the positives then. I mean, across the data that has been presented, I mean, there are places where you are seeing a lot more progress in terms of promotions into leadership positions here. Philippines is a good example of that. Are there best practices within those places that perhaps the laggards can take and look at and emulate?
Yeah, I think apart from organizations doing something, different organizations and different countries are at different phase of transformation that we have to acknowledge. And we can see that in Philippines, they probably had a lot more mandate in driving more equality in the workplace, and that certainly helps organizations to be more aware. And likewise in Singapore, they're taking proactive steps to address having more women representation in boardrooms as well. I think that consciousness will help to encourage organizations to be more aware what they need to do to retain more women in the corporations.
Fiona, thanks so much for bringing us your insights and research. Fiona Ang there of LinkedIn. Speaking of Singapore, the next Prime Minister is saying that the city-state is seeking a compromise in its review of a law banning sex between men. Lawrence Wong told us exclusively that while views on the law have evolved, they must be balanced with perceptions of traditional family and marriage.
We know that these issues are issues where different segments of society hold deep views and sometimes opposing views. And our way of addressing these sorts of issues is really to engage the different groups and see if we can work out some common understanding, some way of having mutual accommodation and compromise without causing deep polarizations and divisions in our society, or deeper polarizations and divisions. So that's a process that we are undertaking right now.
But all the same, you personally, you're a modern man. You've studied abroad. You've studied at Harvard. You're cosmopolitan. It must be very embarrassing having a law like that when you're trying to bring people to come to Singapore.
Sure. I mean, we all understand the history and the reason why this law was in place. It's not something that the government in Singapore introduced. It was a legacy.
The British.
As a British colony. And we know that over the years, many Asian countries which had this legacy as former British colonies have repealed the law. So we understand that, but we also know that in Singapore there are many segments who feel that it's not just about the law, but the law is a marker for other things that they care about society, societal values, about family, about marriage. So it's not about the law per se, but about these other things.
Singapore Deputy PM Lawrence Wong there with our John Micklethwaite. Don't go anywhere, guys. We'll see you in a bit. This is Bloomberg.
คน ลับเหลือเชื่อมากไม่คิดว่าจุดด่างดำบนใบหน้าจะจางลงได้ค่ะ
L'Oreal Paris Glycolic Bright Serum.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
The top names at the Fed are on Bloomberg.
I have a baseline case going into September that is 50 basis points. That's where I've been since the last meeting. But I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it, building it, building it.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
All right, so I think we're going to get it over now to Bonnie Quinn. She's in New York, and she has your latest business flash headlines. Bonnie.
David, thank you. An Asia-focused private equity firm backed by Blackstone is said to be considering a delay of its planned Hong Kong IPO amid market volatility. Our sources say PAG, which is led by Chinese dealmaker Wei Jianshan, is now more likely to make its debut in 2023. PAG applied for the IPO in March and was poised to be one of the biggest financial hubs listings in at least a year. In a lean year it was too. Chow Tai Fook is said to be preparing a sale of Australian power company Alinta Energy. Sources tell us the deal could be worth about $3 billion. We're told that the company, backed by Hong Kong billionaire Henry Chang, is working with Goldman Sachs on the potential divestment and that a sale process could begin in coming weeks. The Disneyland Resort in California is resuming annual pass sales. The new top-tier pass will now cost just under $1,600. Disneyland has been trying to cope with a surge in attendance by raising prices at peak times and requiring reservations. The company saw its parks division's profit climb six-fold to $2.17 billion last quarter. And those are your latest Bloomberg Business Flash headlines. David.
Yeah, well, bond bears, they're in Disneyland, if you're talking Kiwi bond bears, and that rate decision out of New Zealand and the guidance that they might need to hike further, leading to this pop in yields, as you can see on the short end, Yvonne.
Yeah, you see 351 for your 2-year. New Zealand dollar is up. Aussie dollar really reacting to that wage data as well. Take a look at GMM. It's a mixed picture, mostly higher for equities here today. Dollar is pretty mixed across the board. We are seeing some strength in the renminbi. Commodities also seeing a little bit of green here. This is Bloomberg.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
What do Formula One cars and your local supermarket have in common? Well, strange as it sounds, they might both be using the same technology. A lot of innovation has trickled down from the world of high-tech engines, and it hasn't just found a new life in road cars. F1 cars have long been thought of as the peak of cool, and technology in them is also helping to cool down our produce aisles. Engineers from Williams are using their knowledge from 9 Constructors' Championships, working with company Aerofoil to help reduce the energy consumption of supermarkets. The device they're building is based on the design of an F1 car's rear wing. It attaches to fridges to keep more cool air in the unit. They estimate it can reduce supermarket energy consumption by 25%. One innovation from F1 is also helping hybrids reduce their carbon footprint. That's KERS, or the Kinetic Energy Recovery System. In common parlance, it's known as regenerative braking and works by storing energy of the car decelerating in a battery for later use. If that's not enough, F1 is now looking at TERS, or a thermal energy recovery system, looking to harness the heat produced from braking and the engine exhaust. That could allow cars to generate the same power using 30% less fuel. So while F1 may have a reputation as a gas guzzler, some of its innovations in the name of speed are helping in the everyday fight against climate change.
Watch Bloomberg Surveillance Early Edition for the news you need when you need it.
I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London.
Australia's central bank raises interest rates twice as much as forecast.
Then surveillance for in-depth analysis.
Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro, the RBA front and centre.
How does Japan get away with not raising rates?
Can it sustain its normal at a time when everybody else is facing a very different reality?
Bloomberg Surveillance. Be informed. Be prepared. Be ahead of the game.
Most of us don't spend much time thinking about the grid, the dizzyingly huge system of cables, transformers and outlets that reliably powers our lives. It's an easily ignored, change-resistant part of the modern world, and that's the way we like it. But as we move towards less planet-melting ways of producing electricity, the grid is going to have to evolve too.
We're seeing so many countries and governments announcing high targets when it comes to decarbonization and being climate neutral. But this is just one side of the coin. It's not enough to simply generate green energy. We also need to make sure that this is transmitted and distributed to the end consumers.
The grid of today just isn't equipped for renewables. So a new kind of grid is starting to take shape. The supergrid.
No one covers the world like Bloomberg.
Just says it'll get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from?
We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Ken Griffin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, meme stock mania is back. Bed Bath & Beyond surges in defiance of Wall Street as retail investors get a second wind. I'll chat with the CEO of StockTwits about how social media is impacting market moves. Plus, you know who else is back? Adam Neumann. Yes, the WeWork founder who lost billions for investors in one of tech's most spectacular flameouts. He's just raised money yet again, getting the biggest check ever written by Andreessen Horowitz. Silicon Valley's water cooler is all abuzz. We will take you there. And big and tech companies like Microsoft and Amazon have pledged to go green. But critics say they're also helping big oil prolong the fossil-fueled age. We'll tell you how. But first, let's get a look at the markets and stocks shaking off a tech slide as investors buy the dip. Bloomberg's Christina Aquino joins us now with more. Christine?
Well, Emily, it's another classic summer trading day today. Low volumes, not a whole lot of big moves. But let's take a look at the NASDAQ here. We did see some whipsaw price action today. It did take a dive in the mid-morning session, and it looked like it was about to claw that back and come back in the afternoon session. Not enough, though, and we're seeing it just finishing higher on the day here, up more than 2.6% here. And also some good news from big tech today from the 13F filing season. We did see a lot of investors piling back into some of these big tech names in this most recent reporting season. You know, that's really a sign that some of those massive declines that we saw in the first half of the year finally making some of these big tech name stocks cheap enough for investors to buy. But it is still a bit of a mixed bag today in terms of price action. We see Amazon and PayPal finishing the day higher here, but Alphabet and Apple a little bit lower on the day today. But you know who's having a good day, of course? Bed Bath & Beyond and the rest of the meme stock complex. Bed Bath & Beyond, of course, standing out today with a whopping 29% gain on the day. That triggered several trading halts as investors really piled back into the stock. I know that we've seen about $99 million worth of buying into the stock over just the last few weeks. And if you take a look at the year-to-date gains here, that's up more than 82% now this year. Definitely a far cry from the S&P 500's 9% decline here, Emily.
All right, Christine, thanks for that. Let's take a look now at a 3-week chart of Bed Bath & Beyond. The stock up 400% despite at least 3 downgrades on Wall Street. Shares were halted after spiking this morning, a sure sign the meme trade is alive and well. I want to bring in Rishi Khanna now, CEO of StockTwits, a social platform for investors. So Rishi, curious what kind of activity you saw on StockTwits ahead of this surge.
Hey, Emily, thanks for having me on. So we saw, kind of at the end of July, beginning of August, we saw Bed Bath & Beyond rocket up to, on the top leaderboards in terms of activity. So since August 1st, it's been second only to AMC in activity. And, historically over the last 6 months, Bed Bath & Beyond has not cracked the top, 10, 20 or so. And also since August 1st, we've seen it grow its followers by 33%, approaching 50,000 followers on StockTwits. And I think the most interesting thing also has been the StockTwits social sentiment over the last 4 or 5 months since about April has been mostly negative on Bed Bath & Beyond. And then there was a spike in early July in its sentiment. And then since August 1st, it has moved to an extremely positive position and has maintained that position. And you kind of see that correlated with the run up in price, from the $5 that it's been at for most of the last, 6+ months to, I don't know where it closed at today, $20, right? 20, 25. So we've seen a lot of really interesting activity and activity that started in July on the Bed Bath & Beyond side.
So here's the question. Why? Why are retail investors on this train?
Yeah, I think, there's a couple factors, and Bed Bath & Beyond is probably an interesting one. But overall, meme stocks have, we've seen has seen less capitulation in the retail markets than some of the other ones. So AMC has maintained its position. GameStop has been steady. And so the interest there from the retail world has maintained better than some of the other stocks. Bed Bath & Beyond, I think there's probably a lot of factors at play here. There's, the short interest report that came out at the end of July. I think the Ryan Cohen news, obviously yesterday, was probably a big catalyst and factor. And, in the summer we've had, generally speaking, low volumes. And so I think all these pieces come together, and retail definitely still seeks out these, opportunities. Retail traders and investors seek out these opportunities of dislocations, whether it's short interest or just price movements. And Bed Bath & Beyond has been the beneficiary as a stock over the last 3 weeks, I guess, right? So,
can you talk a little bit about the power of Ryan Cohen in particular? Obviously, he's the chair of GameStop, which is sort of the original meme stock. But how much of this is driven by him, and how much of this is truly driven by general retail investor sentiment?
I think definitely in the retail trading community, the Wall Street bets community, the kind of meme stock community, Ryan Cohn seems to have some pretty significant sway on the markets. I don't know personally. I can't speak to anything of that nature. But I think if you look at when he takes positions, the markets move, right? And so the move we saw today in Bed Bath & Beyond, after already a massive move, can probably highly be attributed to the news that he took, the out-of-money call options. I think that came out last night or this morning or whenever it did. But he's an interesting person in this place. Obviously, kind of first with the GameStop, but has made a lot of moves over the last 18 months that have definitely been followed by the retail community and the investing community. So, I think you can't ignore what he does, at least in short-term bursts.
In general, we're hearing, we're seeing this talked about on Reddit, we're seeing this stuff talked about on Twitter. What would you say the role is of social media in stock market movements these days?
I think the role of social media and, kind of social platforms in general is, we do disseminate, information quickly. We allow, kind of the communication and sharing of ideas. And I think, the ability for retail, especially to, kind of communicate, in some extent they've organized in the past, right? Like as we remember in the kind of the major meme stock moment of 21. And I think, social media has a strong role to play, and, platforms like StockTwits to, kind of give retail a place to learn, to collaborate, to share, and ideally to kind of do it in a way where they profit from it and they learn in a positive way. So it's a powerful tool. I think it can be used for good and bad, and but there's a lot of education and learning and partnerships that kind of come out of it from community perspective, I think.
Any regulatory concerns for StockTwits at a moment like this?
Not so much. I mean, we have our house rules and stuff, but those are our rules, and we cooperate where there are issues potentially on the board. We do know obviously some of the bigger agencies like the SEC and stuff are paying attention, but no, I mean we don't see any massive regulatory issues along the lines of social media, not in the current kind of environment, I don't think.
All right, Rishi Khanna, CEO of StockTwits, thank you for joining us on the latest addition to the meme craze. All right, coming up, Silicon Valley's best-known venture capitalist just wrote its biggest check ever to controversial WeWork founder Adam Neumann, sparking an outcry about yet another tech guy failing up. This is Bloomberg.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Anyone out there who still doesn't quite understand, what exactly are kids doing on Roblox?
Kids on Roblox aren't just playing, they're learning, they're hanging out together. When they can't be together in real life, they're hanging out on Roblox. They could be playing hide and go seek, they could be pretending they're running a store or a pizza parlor, they could be making the next big game or adventure. So it's really a wide range of things, and it involves doing things together, pretending you're together.
Everybody is talking about the metaverse as something that's going to happen in the future, but there's an argument to be made that Roblox has already built a metaverse. What do you think?
I think we've started. There's still so much innovation to be done, and there's so much invention to be done in this category that it's mind-boggling.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Tech venture capital pioneer Andreessen Horowitz has just made one of its biggest ever bets on the man behind WeWork. Well, some would call it the WeWork disaster. The firm writing its largest single check investment, $350 million, to Flow, a residential real estate startup founded by Adam Neumann. According to Mark Andreessen, Flow is rethinking the entire value chain from the way buildings are purchased and owned to the way residents interact with their buildings to the way value is distributed among stakeholders. Joining me now to discuss Bloomberg Business Week's Max Chafkin. A lot of tweets today about this, Max. A lot of tweets. What's Adam Neumann's angle here, and why is Mark Andreessen betting on it?
Right, well, it feels like, and again, the details here are so sketchy, and I think that's part of the reason that there's a lot of skepticism. It feels like Adam Neumann is trying to do something very similar to what he did with WeWork, which is to take a traditional real estate business. With WeWork, of course, it was commercial real estate, offices. Here we have, with Flow, residential real estate, apartments, and kind of give it a tech sheen. And that worked for quite a while with WeWork. We saw the valuation climb to something like $50 billion. And then, of course, as you said, it kind of fell apart. And what we have now is a much more conventional real estate company that a lot of investors lost a lot of money in. So it's sort of hard to understand why Mark Andreessen, why Andreessen Horowitz would be writing such a large check, although you just have to think they see this as, another long shot bet. Maybe this is a contrarian angle. It kind of seems weird to have backing a billionaire as a contrarian angle, but Mark Andreessen is more successful than I am, so maybe he knows something I don't.
Well, Masayoshi Son lost almost $9 billion on WeWork. Why does Mark Andreessen think that's not going to be his fate? I mean, is he the smartest VC ever, or is he also being hoodwinked?
Well, I mean, of course, Adam Neumann, if you read some of the published accounts, was very effective at talking rich people out of their money, and so that may be part of what's going on here. Andreessen clearly has, a soft spot for trolling and that sort of thing, so maybe that is playing into it. You also, if you read between the lines of the blog post he wrote that was published yesterday, it sounds like there's going to be some sort of crypto or tokenized angle here, which of course Andreessen Horowitz has been very into. I mean, I think the jury is still very much out on whether or not that's going to work. But it feels like, hey, maybe we've got WeWork, but with apartments and a little bit of crypto mixed in, and you be the judge of whether that's a good idea or not.
Sounds like a recipe for something. All right, Bloomberg's Max Chafkin, thanks for weighing in. We're going to get some more reaction to this now. The real question, of course, is in a valley where it is notoriously hard for some founders to raise money. Why is it so easy for some founders who failed or messed up to raise money again? Allison Byers, an early-stage founder and angel investor, tweeted, "I'm obviously outraged by the A16Z news. If you follow me, rage is likely all over your feet. I'm also not surprised at all. This isn't new. It is how VC operates." Joining me now, Allison Byers, founder and CEO of Scroobius. Allison, why do you feel so much rage?
Yeah, so whenever something big like this comes out, a big funding round, a lot of underrepresented founders, particularly women, people of color, are asked, why the outrage? Why do you have this emotion? Well, it's because only 2% of VC dollars go to women, 2% go to Latinx founders, 0.67% go to Black founders, and there are less than 100 Black women total who have raised more than $1 million in VC funding. That's the outrage. It's visceral. It hits you. But then it also quickly becomes a muted rage because, as I tweeted, it is expected. It is not a surprise. We are used to it. But you have to feel that rage when you are part of that community that is just historically blocked from accessing this funding.
That said, we reached out to a lot of female investors today. Privately, they feel like you. Publicly, they don't want to talk about it. Why do you think that is?
Well, it is really difficult to talk about. In any industry where you are marginalized or where you can have repercussions for speaking out, it can be a scary thing to do, right? There's risks. There's risks to my business. There's risks to those who associate with me when I am outspoken. But I also really believe that in order to have any kind of change or awakening of these reactions within other populations and segments, you can do something about it. You have to talk openly about it. And to me, it's just a clear choice. And the community that comes around it and opportunities like this that come from it is how you catalyze public discourse and really make a change.
So here's what Marc Andreessen wrote about this. He says, Adam is a visionary leader who revolutionized the second largest asset class in the world, commercial real estate. Adam and the story of WeWork have been exhaustively chronicled, analyzed, and fictionalized, sometimes accurately. We understand how difficult it is to build something like this, and we love seeing repeat founders build on past successes by growing from lessons learned. What's your response to that?
So my response to that is, regardless of anything or what you believe may or may not have been fictionalized, he knowingly perpetrated fraud and lost billions of dollars. It's a fact. What is a major, prestigious investment house doing backing fraud a second time? There is no excuse for that. And there has to be the ability to separate what is a good business idea that has the potential to be a good investment from the person who is behind that idea and executing on it. And what I would say is let's think about, where does Andreessen's money come from, or any investment house? It comes from endowments, it comes from wealthy individuals, it comes from pensions, it comes from other fiduciary backers. Is that where those people want their capital to be deployed? Andreessen is the steward of that capital. Do they want $350 million in a single check, the largest check written, to go to a person who knowingly committed fraud and lost billions of investor dollars? To me, I don't know how you justify that.
Taking on Andreessen Horowitz, Allison, is bold. I mean, you might never get a check from them. Why take that risk?
Okay. I honestly, what this signaled to the world, and particularly to underrepresented founders, again, only 2% of females have 2% of VC dollars go to women. I don't think I am getting a check from them, but also it signals that their check is not for me. Unfortunately, it signals that venture may not be for many founders, and that's just not true. But you do have to be intentional and realistic about where you put your time as a founder if you want to build a successful company, and intentional about whose money it is that you're taking. For me, ethics, business ethics, and competency and honesty are paramount, along with the viability of the idea of my business and the difference that I want to make in this industry. I do not want investors who don't believe in that. I do not want an investor who clearly says, it is okay that you overstated yourself and your business. We're still going to write you a check. We're ignoring that, to the exclusion of others who have more viable business ideas and better business ethics.
You allude to that in your tweet where you say founders value your time. Getting a meeting does not equal getting a check. Choose wisely. You also told TechCrunch, you could be mad about this all day long, but you have a lot of other female founder you know what to do. What do you mean by that? I assume you're talking about all the extra burden that comes with being a female founder. What's all this extra female founder stuff?
Yes, of course. I think it's that sentiment again. It's that muted rage. It's the known element for anyone who is on the receiving end of this, that this is how it is. And if we're going to run our businesses, we have to run our businesses. It is harder for us. The numbers don't lie. We do not get the funding. We do not get the resources. We do not have the access to the networks. Our metrics that we are assessed by for signals of growth and potential are much harder than others. And this goes for women, but also a lot of other underrepresented groups. And you just have to keep going. I don't have time. I don't have time for this to consume my day. I'm building a successful business and I'm going to earn a profit for my investors. So yeah, I have my bleep to do. I got to go do it.
Let's talk about that. Your company, Scroobius, helps companies, helps people with their own pitching. What's your big idea?
Yeah, so thank you for bringing up Scroobius. So our company is 2 years old. We're a startup too. It stemmed from my last experience where I did successfully raise $10 million for a startup medical device company that I helped launch and co-run, where I experienced extreme gender bias during the fundraising process. So with Scroobius, we are productizing what you would get from working with a pitch coach or having access to resources that teach you how investors think so that you can present yourself as investable. Because if you have been traditionally blocked from accessing those resources, whether by network or whether because of funds, because those are very expensive things to access for quality material, you don't know that you are not presenting in a compelling way. It is not intuitive to understand how investors think. And then on the other side of that, we are building, not yet launched, we have launched that founder side, a data-driven way to curate in a hyper-curated way what investors see so that it will speak to them and what they want to write checks to, both the idea and the person, which is where we need the checks from at the early stage.
Allison, thank you for having the courage to talk to us today and for sharing your story. I appreciate you stopping by.
Thank you for having me
founder
on.
And CEO, Allison Byers, also a hilarious Twitter follow if you're looking for more. Much more coming up. Stay with us. This is Bloomberg.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Strong enough to stay. We will never break as the water rises and the mountains shake. Our love will remain. We will never, no, never. We will never, no.
A few other stories we're watching. Coinbase shares fell as much as 7% today after announcing in a blog post that it will temporarily pause new Ethereum and ERC20 token deposits during the merge. It is a temporary, precautionary measure. Ethereum anticipates the merge will be completed on or around September 15th. And after a number of delays, Apple has set a September 5th deadline for its corporate workers to be in the office at least 3 days a week. COVID surges delayed the company's plans multiple times. Apple has been making other COVID-related adjustments. It's also dropped its mask mandate in office common areas. And according to people familiar with the matter, Apple has laid off many of its contract-based recruiters in the last week. About 100 contract workers fired at the world's most valuable company were told these cuts were made due to changes in Apple's current business needs. We reported last month the company was joining many other tech firms and hitting the brakes on hiring. And coming up, how big tech is helping big oil pump more fuel, what that means for their pledge to transition to a greener future. Next, this is Bloomberg.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
So for somebody who's watching this and wants to be a successful global business leader, what are the skill sets?
I would prepare well before I got the job or was given the nod.
What happens politically and then what the economic fallout is.
Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. President Biden has now signed the $750 billion healthcare, climate, and tax bill into law, capping more than a year of negotiations as Democrats head into midterms this fall. Known as the Inflation Reduction Act, the bill aims to reduce inflation while encouraging greener industries to develop. And big tech has been vocal about wanting to go green for some time now, except big tech has actually been helping big oil make more profits than ever. Let's hear more about how. Bloomberg's Mark Bergen, who covers Alphabet, joins us now. So, Mark, is there some hypocrisy here, I sense?
That's certainly the criticism from both from outside environmentalists and then from even employees of these companies. So Microsoft actually has been the leader in the energy market, followed I think closely behind by AWS and Amazon. These companies will say and have said multiple times that the reason that they're partnering with the oil and gas industry is to help them with the energy transition to clean, renewable sources, sort of low carbon. We started out this report to sort of interrogate that idea. It looks like so far a lot of the work has been their existing oil and gas production, whether that's making that more efficient. And in some cases, the oil and gas companies say they're lowering the carbon footprint of those operations. There's certainly evidence that they haven't slowed down oil production, and especially now when you're seeing gas prices have been so high this summer, there's political demand for the oil companies to be producing more. And the cloud companies really have this powerful data assets that let them do that more efficiently.
I recently spoke with Thomas Kurian, the head of Google Cloud, about Google Cloud's deal with Saudi Aramco. Take a listen to what he had to say.
We work with their system integration division to provide our technology to customers in different parts of the Middle East. We have said that again and again, that we don't work with the oil and gas division within Aramco, but with the system integration arm of Aramco.
Does what he said there underscore what you're trying to explain here?
I think so. I mean, there's certainly employees at Google have been very vocal about this, as have employees in Amazon and Microsoft. And in some ways, if you're just a Google shareholder, you might think, well, I want them to be more active in the industry. Like, there's a lot of money in the oil and gas sector right now, whether that's their regular sort of production and exploration businesses, and even some of this, Chevron and BP and these big majors have talked about a big game about investing a lot of money in renewable energy. And so I think in some ways Google is sort of in behind in this sector, whether or not that's because they intentionally sort of put one arm behind their back as far as limiting their work. But I do think that's a tension. But it doesn't seem to be slowing down Microsoft and Amazon. And in their defense, they're saying that, these oil companies wouldn't be able to move into the renewables and clean energy as quickly without us.
Interesting. All right, well, we'll continue to watch your coverage on this. Bloomberg's Mark Bergen. Thank you. Well, the Inflation Reduction Act will lower drug costs as well. I want to bring in Jason Kelly now, the CEO of the biotech firm Ginkgo Bioworks, to discuss. So, Jason, how does this bill being signed into law impact your corner of the biotech universe?
Yeah, so there's actually two recent bills. So there's the CHIPS and Science Act and then the Inflation Reduction Act. Both of them are relevant in biotech. So on the Inflation Reduction Act, you saw these 45Q tax credits being expanded. That's really to create a growing market for carbon capture. And I think biology, if you look out the window right now, you will see plants out there pulling CO2 out of the air and fixing it. And so biology we see as one of the few really scalable technologies for doing carbon capture. But I think the CHIPS bill actually is just as important from my standpoint.
Why do you think it's so important?
Yeah, so if you look in that bill, I think two things are critical. So one, I think you see the U.S. sort of kind of getting our mojo back when it comes to industrial policy and the government saying, hey, this sort of technology is important for us to have on shore. Actually, at Ginkgo, we just acquired a company out in California, or announced that we're going to acquire a company in California called Zymergen. This is to really build on the foundry technology we have at Ginkgo. My view is we want to be doing that so that we're not doing a biochips bill, 20 years from now and having to bring that back on shore. These types of growth of these biofoundries here in the U.S. I think is important, and you see that reflected in the bill. It directs a National Engineering Biology R&D initiative where OSTP is supposed to direct NSF and DOE and DOD to spend on this, and then also that has the OSTP establish a national genomic sequencing strategy. So you actually see bio in the bill alongside chips. So I think it's a good signal by the government that these types of technologies are critical for the U.S.
You've become a sort of regular voice for us through the pandemic. What are the biggest post-pandemic storylines in biotech right now that aren't being talked about enough?
Yeah, so I think the big one is going to be certain types of technologies that got built out during the pandemic are going to stick around for ongoing prevention. So we actually just announced yesterday morning it's up to $61 million contract with the Centers for Disease Control here in the U.S. to do monitoring on an ongoing basis at airports in the U.S. Where we basically collect samples from planes that come in internationally and then sequence the DNA to look for new variants. And this program we did as a pilot with the CDC caught the first cases of BA2 and BA3 in the U.S. that were sequenced. Well, now the CDC is funding this up to have it stick around. I mean, to me, this type of thing eventually will be kind of like a smoke detector, right? We should be on the lookout for infectious disease, and that's a change, I think, that has happened because of COVID, but will stick around after COVID.
Are we prepared to go back to school? You know, as a parent, I feel like there are still conflicting messages about masks, no masks, testing. Like, what are the rules supposed to be?
Yeah, so CDC did just update some guidance on this. So I think where we're headed towards is I think you're going to see the CDC starting to reflect a little more how people have been operating. I think you're going to see you seeing relief in some of the things like the distancing rules and mask wearing, making it easier where if you've had an exposure, you don't need to quarantine. Now, just to be clear, if you have COVID, you still need to quarantine, right? So I think there's been some misinterpretation a little bit on that. You know, so if you're positive for COVID, you should quarantine. But for folks that have been exposed, you don't need to. That's going to help a lot in terms of having classes full. I think the regular monitoring, which we do in, as you know, like 10 or 15 states across the country, where you're doing weekly testing in a group. This actually allows for schools to stay open, right? Because you can identify, if there's a positive case in a class, you can pick it out, send that one student home to quarantine, but not the whole class, and then prevent big outbreaks in schools, which I think if we let it just kind of rip, you will see a lot of that type of disruption, in various places. And so I think you'll end up seeing monitoring stay, masking go, distancing go, and then the big wild card is there some new variant that flips that all on its head, and that's certainly still in the range of possibilities.
Well, on that note, do you think there will be a universal COVID vaccine in the future, or no, because, the virus is just going to keep changing?
So, I mean, I think you will see the virus keep changing. I think people are working on this. There's ways to get at it. In the scope of biotech, like over the next 10, 20 years, I think we will get dramatically better at this. But we, obviously we've been fighting flu and we do updated vaccines annually. I think you'll see things like that in the near term, but folks are definitely working on that. And so, we can hope, but I'd say in the near term, it's more likely to be just updated versions of the vaccine.
All right, well, we can hope indeed. Ginkgo Bioworks CEO Jason Kelly, always good to have you. Jason, thanks for stopping by. All right, coming up, why is Jesse Powell still so bullish on Bitcoin? More on that and wider institutional sentiment on crypto next. This is Bloomberg.
You will put a woman on Mars. You will bring forth global cooling. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Huge system of cables, transformers, and outlets that reliably powers our lives. It's an easily ignored, change-resistant part of the modern world, and that's the way we like it. But as we move towards less planet-melting ways of producing electricity, the grid is going to have to evolve too.
We are seeing so many countries and governments announcing high targets when it comes to decarbonization and being climate neutral. But this is just one side of the coin. It's not enough to simply generate green energy. We also need to make sure that this is transmitted and distributed to the end consumers.
The grid of today just isn't equipped for renewables. So a new kind of grid is starting to take shape. The supergrid.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Yeah, it's hard to know with the private markets. Obviously we're not tracking the price on a minute-by-minute basis like the public markets are. So it's really hard to know. We haven't been out raising capital. We've got a very long runway of cash in the bank. We're profitable, so we don't need to go do another financing anytime soon. I think we'll probably wait for the market to improve before we do another round.
It is time now for our crypto report, and that was Kraken CEO Jesse Powell talking about what he thinks of the current crypto bear market in an interview earlier on Bloomberg's Crypto Show with Kaylee Lyons. Let's talk about it more with our own crypto contributor, Sonali Basak. Sonali, give us an update on the crypto markets and whether Jesse Powell is right by just waiting it out.
Well, Jesse Powell had bought in more at about 18,000, and you saw Bitcoin did reach 25,000 for a bit this month. It has come down below 24,000 again. So where does that leave us, Emily? It doesn't leave us at the price that he thought it would hit last year. Do you remember he told you and me that Bitcoin would be worth a Lamborghini? But even though it has not hit that price, you do see it about half the price it was at this time last year, but double where it was 2 years ago. It'll be interesting to see the market kind of sort out the natural price of Bitcoin as we make it through another cycle. Wanted to also point out Ethereum on the month because you do see a gain on the month. You do see the price rising because of that anticipation of the merge. But in more recent days, that excitement has worn off just a little bit. You have it rolling around 18,077 right now. It did peak above 2,000 this month with that anticipation of the merge. I know we're going to talk a little bit more about that next.
All right, Sonali, stick with us. I want to talk about this more and how Bitcoin startups are trying to secure capital as the crypto winter continues. Are investors buying the industry back up? Are they staying cautious? Let's talk about that with Elise Killeen, founder and managing partner of Stillmark. So Elise, are you on the bullish side like Jesse Powell or somewhere else on the spectrum?
We're very bullish, both about Bitcoin, the asset, and the underlying protocol. And we have to be because entrepreneurial activity has never been more robust. In fact, we've seen a pickup in sort of the tests that people are willing to take during this period. When the market is more quiet, when we're in a bear market and there's less consumer activity, it's a great time to both dig into the metrics that you've produced in bull market times, as well as to experiment. And that's what we're seeing now from top founders.
What do you make of the merge? Because you saw this news coming out about Coinbase really looking to pause transactions in and around the merge. Clearly, there's going to be some technical difficulties around it as people try to scam others. That was a warning that they sent out. What are you thinking will be the near-term issues, and what is the long-term prospect?
Well, Coinbase is note that they're pausing deposits and withdrawals for ETH, I think is something that's expected, but it points out to us the trade-offs of using a centralized exchange to hold your cryptocurrency. Of course, there's some opportunities in using a custodian, but the advantage is to people using self-custody that they themselves set the rules for how they use their Bitcoin or their ETH or other forms of crypto assets. Now, looking ahead to ETH 2.0, I think that we know that there's risks, and that the Ethereum community is hoping that there's great reward. But one of the things to look out for is the centralizing forces of moving from proof of work to proof of stake, of course. We know that the majority of ETH staked, the vast majority of ETH staked, is ETH belonging to these large institutions. And so those folks, of course, are exposed to US regulators and have been tested very recently with OFAC coming out against Tornado Cash. And these same institutions that comprise the majority of staked ETH, in fact, are those that have complied within days to OFAC's sanction of Tornado Cash.
I'm so glad you brought up Tornado Cash, because earlier today, Jesse Powell did say that the shutdown was unconstitutional. I'm wondering how you see this debate really playing out in the market, the good, the bad, and what behaviors might not be accepted among these companies moving forward.
It's hard to know what regulators are going to do, but it's easy to know how centralized institutions are going to respond. They're going to comply. And that's the value, of course, of decentralization. So we know that Bitcoin leads with decentralization. What that means is that when looking at how the protocol is secured, Bitcoin finds it most important to make sure that the protocol is secured in a decentralized fashion and that any individual user can do two things. One, they can validate the code. Bitcoin's core protocol and its payments network protocol are open source. Users can know the rules, the software rules of these systems. But number two, users can participate in validating the accuracy of the ledger themselves. That's something that's much easier to do in Bitcoin than in other protocols. And one of the reasons it's important to be able to do that is sort of being demonstrated by the news of the last couple weeks and the implications of government's imposition of regulations, for instance, regulations to prevent things like money laundering. We're seeing that happen now with Tornado Cash, and we know that some of the most critical services in the Ethereum space have felt the need to comply and have quickly done so, making users that have received, even passively, transactions from Tornado Cash sort of lose access to services that they depended on.
Elise, I recently sat down with Coinbase COO Emily Choi to talk about their partnership with BlackRock. Take a listen to what she had to say.
I have wanted to do that BlackRock partnership since the day I joined Coinbase. So for this to come together now, actually, during the crypto winter is such an incredible testament to where we are, where they are, where their customers are. And I think the most important point is it speaks to institutional customers, very traditional institutional customers, wanting to get crypto asset exposure.
She said to expect more partnerships like this, but every day there are more bumps in the crypto road. You know, how is this all impacting? Give us the temperature of investor sentiment, institutional sentiment.
So the BlackRock and Coinbase partnership will launch Bitcoin only. What BlackRock is doing is allowing its institutional investors to participate, to buy Bitcoin and to trade Bitcoin via Coinbase while still using BlackRock's software for management and for risk analysis. This, I think, was a response, we see it as a clear response to the demand of the very traditional institutions that are served by BlackRock. Now, what's important to note here is that providing a new on-ramp in a familiar environment and with familiar tools is likely to act as a very significant catalyst for institutional adoption. I want to flip this for a moment, though, Emily, and say that while we're seeing traditional institutions adopt Bitcoin, like BlackRock, we know that some of the most significant and important adoption of Bitcoin and of Bitcoin's payments network is happening in emerging markets. And so these two forms of adoption are happening simultaneously, and I think add to sort of the fundamental value of Bitcoin that Jesse from Kraken spoke to earlier.
Elise Colleen, Stillmark Capital, thank you so much for sharing your views with us today, as well as our own Shonali Bosick. Okay, coming up, is the FTC harassing Jeff Bezos? That's what Amazon claims. We'll have more on why next. This is Bloomberg.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
For parents and anyone out there who still doesn't quite understand, what exactly are kids doing on Roblox?
Kids on Roblox aren't just playing, they're learning, they're hanging out together. When they can't be together in real life, they're hanging out on Roblox. They could be playing hide and go seek. They could be pretending they're running a store or a pizza parlor. They could be making the next big game or adventure. So it's really a wide range of things, and it involves doing things together, pretending you're together.
Everybody's talking about the metaverse as something that's going to happen in the future, but there's an argument to be made that Roblox has already built a metaverse. What do you think?
I think we've started. There's still so much innovation to be done, and there's so much invention to be done in this category that it's mind-boggling.
Part of what I love about business is you get to build things from nothing. I don't have any investors. All this is all money in. This is me just building it, building it, building it.
Amazon is fighting back against the FTC. In a filing made public on Monday, Amazon claims that FTC staff have made unduly burdensome demands on the e-commerce giant as it keeps investigating its subscription services. Here for more on this, Bloomberg's Emily Birnbaum with us now. And Amazon also claiming that the FTC is harassing Jeff Bezos. How so?
Yeah, so in this filing made public yesterday, Amazon claims that the FTC has been overreaching in their ongoing consumer protection investigation into Amazon subscription services. So that includes Prime, and it's actually expanded to include Audible, Kindle, and some other of Amazon's services. So they, the FTC issued what's called civil investigative demands, which are essentially subpoenas to 20 former and current Amazon employees. They served them at their houses, and that includes Jeff Bezos and Andy Jassy, the two top executives at Amazon. And they say it was unnecessary to give them to Jassy and Bezos. These are about a lot of different parts of the business. These are the highest level executives. There's nothing, this is what Amazon says, they say there's nothing that Jassy and Bezos can give you that you can't get from documents and lower level executives.
Is this unusual?
It's actually extremely unusual in how confrontational it is. What's typical is that companies will always fight to narrow down subpoenas and civil investigative demands that they get from the government. But what's atypical is how public this is, how aggressive they are in their rhetoric, calling this very unusual, perplexing, and asking the FTC to pare it down in such a public way.
Remind us why the FTC is investigating Amazon and the status of this case.
So the FTC has been investigating Amazon for several years now. It actually began under the Trump administration when they were given the power to investigate Amazon over antitrust concerns. It's gotten broader since then. This particular investigation that we're talking about is a consumer protection investigation into whether Amazon makes it too difficult for consumers to opt out of Amazon Prime or other subscription services. But this is only one part of a sweeping investigation that looks at all parts of Amazon's business, including cloud, including streaming.
So when could we expect this to draw to some sort of conclusion?
The filing says that the FTC intends to make a decision about whether to sue Amazon over the subscription issue by the fall. This is probably going to prolong it, so it's probably going to take more time than that, a couple of months. But what's clear from the filing is FTC staff are under a lot of pressure by the commissioners, including FTC Chair Lina Khan, to get something done by the end of the year.
All right, well, we'll continue to follow your reporting on this. Bloomberg's Emily Birnbaum for us in Washington. Thank you. And
thanks so much.
That does it for this edition of Bloomberg Technology Wednesday. We've got ARM CEO Renee Haas joining us about the chip landscape and the latest with their possible IPO. And don't forget to check out our podcast wherever you get your podcast. You can find it on the terminal, online, Apple, Spotify, iHeartRadio, and more. I'm Emily Chang in San Francisco. This is Bloomberg.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Facebook but like your friends? If you live in Europe, your life might be about to get a whole lot easier. Starting in 2024, the European Union is going to require big tech companies like Meta and Apple to make it possible to send messages between their messaging apps. That might let an iMessage user chat with a WhatsApp account. The technical name for this is interoperability, and it's part of the EU's Digital Markets Act, legislation intended at loosening big tech's grip on the digital market. The EU's thinking is that messaging locks users into the tech giants' platforms because leaving WhatsApp or Facebook Messenger means losing the ability to communicate with all your friends. But thanks to the EU, you'll be able to send a message from a smaller competitor like Viber to someone using iMessage. And if every company signs on, then you might be able to communicate with everyone using just a single messaging app. This change clearly would make life easier for consumers, but it's quite controversial. Some technologists think it could break end-to-end encryption or stifle the innovation that makes messaging platforms fun. And if smaller companies like Signal or even the big tech companies decide they don't want to use these new technical standards to connect their massive messaging platforms, some argue the law is completely useless. It will take several years before the EU's rules go into effect, but if this new interoperability requirement works, it could have a huge impact on big tech's behavior and the way you communicate. And of course, where the EU leads in terms of tech regulation, the US often follows.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg.
This is Bloomberg Daybreak Middle East. Our top stories this morning. A more hawkish than expected message from the Reserve Bank of New Zealand sends the Kiwi higher. Now markets wait for clues from the latest FOMC minutes about what the Fed might do next. President Biden signs a sweeping tax, climate, and health care measure into law, a major legislative victory for Democrats ahead of the November midterms. Oil is trading near a 6-month low in the meantime amid headwinds including Iran and slowing global growth. We're live to the OPEC headquarters in Vienna ahead of the interview with the new Secretary General later. And we get passenger numbers from Dubai airports later this hour. We'll bring you the details and speak exclusively to the CEO, Paul Griffith. Just gone 8 a.m. across the Emirates. I'm Yusuf Gamaluddin in Dubai. We've seen equity markets seesawing between steep losses and gains. The VIX prints sub 20. Your equity futures at the moment at the S&P 500 mini just barely above the flat line. We had important earnings out from Walmart overnight in the United States. Told us a bit of a story of sure beating lowered expectations. If that's your benchmark, then well, life's a lot easier, isn't it? In U.S. Treasuries, I'm looking at some of the economic data that came through. We had weakness in the investment grade issuances. Some of the deals were announced there. This is the cross asset board here. Your Bloomberg dollar index halts a 2-day gain. And Brent crude at $92.83 a barrel. Goldman Sachs saying the Iran nuclear deal is unlikely after we saw the crumbling a little bit of the oil price in the last couple of days. I want to get to this chart. The once booming U.S. housing market is sputtering. Home builders are signaling a slowdown as the interest rates bite. Construction starts for July falling to the slowest pace since early 2021. So your single-family home building tumbled. The report basically showed that sentiment slid for an 8th straight month in August. That is the worst stretch since about 2007. Absolutely crucial as we begin to think about what the Fed may do going forward. And then quick look as well at natural gas. That really stood out to me and on the global markets map. U.S. gas jumping to a 14-year high on the winter concern, the Europe crisis. So what's going on here is there's a hoarding of natural gas in Asia and in Europe, and it's creating some fierce competition among utility companies. So this is also affecting some of the contracts in Asia. Germany has enough gas for less than 3 months. This is over 5 days, 15%. There's a lot more analysis to be done on that front. In the meantime, let's check in on the markets in Asia with Juliet Salih, who joins us as always in our morning routine. Hey, Jules.
Hey, Yusuf. Yeah, look, interesting to see the fluctuation you are seeing in the Kiwi after that 50 basis point hike from the RBNZ. We did hear from Adrian Orr in the last half hour or so, and Kathleen will get into that in a moment. You did have the Aussie Kiwi much lower than where it is now. The Aussie had been falling by about 0.5% against the Kiwi. Traders, though, saying that that pair had started to sell off even before the RBNZ rate hike, also on the back of a slight miss on Aussie wage data. Elsewhere, we are seeing Asian stocks pretty much reverse yesterday's losses, so some good moves coming through in the likes of Japan, China and Hong Kong. And we're also awaiting a D-Day, if you will, from Tencent. Let's flip the board and have a look at my chart here, because Tencent is expected to post its first ever negative growth quarter for the second quarter. And this is as it continues to grapple from the crackdown from China's COVID lockdowns as well. Analysts expect its online game and advertising segments in particular to be hit hard by China's COVID zero policies. And we're also watching this reaction from the Reuters report that Tencent intends to sell as much or all of its $24 billion stake in the company. You can see from my chart, Tencent here is the blue line, that the stock has lagged its sector peers since that State Council intervention in mid-March. So we'll continue to watch market reaction when those numbers hit the tape later today. Yusuf.
Absolutely something we're going to watch very, very closely. Jules, thank you for the moment. That's Juliet Salih there. So we've had a more hawkish than expected message from the RBNZ. Now markets wait to see what the upcoming FOMC minutes might show. Our global economics and policy editor Kathleen Hayes is here. So Kathleen, how wide did the RBNZ leave the door open to further tightening?
I would say the door is wide open now. There's no question that they're ready to keep going on interest rate increases, because even if it's slowing the economy down, they still have an inflation rate that is far too high. Adrian Orr, governor of the Reserve Bank of New Zealand, at the beginning of his press conference said this about just how serious they are about hiking rates to get inflation under control.
Committee members agreed that monetary conditions need to continue to tighten until they are confident that there is sufficient restraint on spending to bring inflation back to within the 1 to 3% target range. The committee remains absolutely resolute about achieving our monetary policy remit.
Consumer spending, yes, it is getting weaker, and that's one of the things they need to see. Hiking the key rate 50 basis points to 3.0%. That's a 7-year high, and in fact, they have now done a total of 275 basis points in rate hikes. They started before the Fed. They've done more. The Fed that's only done 225 by comparison. They see the key rate now at 3.69% by the end of the year. They had been looking for 3.25 and 4.1 in the second quarter of 2023. They have been looking for 3.9 and not until later in the year. So faster, bigger, they want to get there. They want to get this done. In fact, they're going to keep hiking rates at pace. In other words, we're not slowing down. You can slow the economy, but we have to slow inflation.
I want to get to the other side of the world. I want to get to the Fed because we're expecting minutes from the July 21 meeting. It's a little bit backward looking for my liking, but what are you hearing in terms of potential validation or pushback on what we might get in terms of a dovish pivot? Well, what we're going to get from these minutes is what they were looking for a dovish pivot then. And as you may recall, investors said, oh my goodness, they opened the door to that 75 basis point rate hike in September, but at the same time, they said it will depend on the data. Oh, that must be opening the door to a softer path. He also said the Fed has basically gotten pretty much to neutral, but a lot of economists said he was referring to the long-term neutral rate, which is seen around 2.5%, because he also said, the Fed also said, they have to get to more restrictive policy. They're not ready to be finished yet. I think that the most important thing Powell said, and we'll get to see more of this, I think, in detail in the minutes, because he said that if you want to get a sense of where we expect to take rates, look at the last set of dots, our summary of economic projections. What those dots showed was that they expect 3.4 to 3.5% on the funds rate by the end of this year. That would necessitate at least another 100 basis points of hikes. And then sometime in the second half, getting it up to possibly around 4% or even higher. So we'll want more information, more sense from how many participants. Was it several or was it a few who said, basically signaled there's a long road ahead? Do we get more signs that they're not looking to just raise rates and then hold them and start lowering them down, Yusef, that they're not looking to hike rates, or excuse me, cut them next year? So, the downshift in monetary policy doesn't seem to be on the table. Looking at what Powell said, but the minutes are going to give us a lot more information. Kathleen, hugely valuable perspective as always. Thank you for that. Kathleen Hayes in New York. I want to get to another story here on President Biden because he has signed a sweeping tax, climate, and health care measure into law. Now, that's a major legislative victory for Democrats ahead of the November midterms. The bill changes the way medicines are priced and adds minimum 15% of a tax for corporations. Biden says the Inflation Reduction Act is the biggest commitment to mitigating climate change in U.S. history, investing some $374 billion.
The bill I'm about to sign is not just about today, it's about tomorrow. It's about delivering progress and prosperity to American families. It's about showing the American and the American people that democracy still works in America.
Bloomberg's Bruce Einhorn joins us now for more analysis. Bruce, for our global audience, how do you best benchmark this latest bill in terms of what it delivered versus what was promised?
Well, it's certainly a lot smaller than what President Biden had initially sought last year when there was talk of trillions of dollars of spending on a whole range of issues such as education, housing. A lot of those things have gone to the side, of course, because in a 50-50 Senate, when the deciding vote is centrist Joe Manchin, it's going to be hard to get a lot of those things through. That said, Democrats are boasting that this is the biggest spending by the U.S., biggest commitment to reducing climate change. It's to be fair, it's pretty much the only thing that the U.S. has done. The last time there was any serious effort to address climate change was in the early days of the Obama administration, and that didn't pass. Since then, there's really been no action. So this is significant. It is going to include $370 billion in spending to address climate change, things like tax credits for electric vehicles, clean energy. There's a whole range of things there. When it comes to the other items in the act, then you have spending on healthcare. There's going to be a cap on how much seniors who are on Medicare have to spend on prescription drugs. Medicare will be able to negotiate drug prices for the first time, something that Democrats have been trying to do for decades. There's also a bunch of changes to the tax code, including a 15% minimum tax for large corporations. The president and other members of the Democratic Party are expecting to really campaign on this in the next few weeks. They had the signing this just now in Washington. However, there's going to be a much bigger event in early September, right after Labor Day, to really celebrate this. Labor Day, of course, traditional started the midterm of the election season, so this is something that the Democrats are hoping to really push as part of the narrative that they're addressing issues going into these midterm elections, which for a long time people had thought the Democrats were really going to struggle in. Now the picture is looking a little bit brighter for them.
So much at stake there. Thank you, Bruce, for running us through some of the critical points. It's Bruce Einhorn. Let's get to the U.S. natural gas prices. Those have surged to the highest settlement, not since the war, but since about 14 years ago, amid growing concerns about domestic winter reserves and the worsening energy crisis in Europe. Meanwhile, a global rush to secure shipments of LNG has catapulted Asian prices as well to the highest in about 5 months. Let's get out to our energy reporter, Steven Stepczynski. Steven, there was a little bit of a concentration on the fallout for prices on mainland Europe. That's now completely gotten unhooked and is affecting the whole world.
Yeah, absolutely. I mean, this energy crisis, this global natural gas crisis has gone global. No doubt about it. Now, when you do look at it on a price basis, European prices are by far higher than both Asia and the United States. You know, U.S. natural gas is trading, you just saw that chart, at about $9.50 per million British thermal unit. In Europe, that's about $70. So the U.S. is still much cheaper, but when you look at it, you know, the U.S. is at $9. You know, we haven't seen that for 14 years, since 2008. Now, that's because the shale revolution unlocked massive reserves of gas in the United States, and the U.S. became a net exporter of LNG. But as the U.S. boosted LNG exports, they connected it with global markets. So as the European prices rise, it's going to lift up U.S., it's going to lift up Asia, because the world is fighting for natural gas, especially as winter nears.
Stephen, thank you very much. Some absolutely crucial developments there to reflect on. That's Steven Stepczynski in Hong Kong. I want to get you a snapshot of what else is still to come on the program. We get an exclusive conversation with the Dubai Airport CEO. That's Paul Griffith. We're going to discuss the earnings and the outlook as well for air travel in the region. But up next, we tackle the markets as we await the Fed minutes. LBBW Chief Economist Moritz Kremer joins us to talk about investor sentiment and risk. This is Bloomberg.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Obviously, there's a lot of uncertainty in the 6 to 12 month forward horizon. We're still very focused on some of the global threats that we face, including the energy markets and the second order implications of the war in Ukraine. But if you look at the steps we're taking and the policy actions we're taking, I think it's certainly the case that the Inflation Reduction Act, the CHIPS and Science Bill that we passed just a little while ago, those are going to help. They're going to help meaningfully in this transition.
The U.S. National Economic Council Director, that's Brian Deese. The boost to market sentiment from U.S. earnings faded, though slightly, as the focus turns to tonight's Fed minutes, which could shed light on whether hawkishness has peaked. The latest Bank of America Fund Manager survey, in the meantime, caught my eye. It shows pessimism has expectations for global growth and profits now are up from all-time lows. Let's bring in Moritz Kramer, who's the chief economist at LBBW. Moritz, are these glimmers of optimism we're seeing in surveys like that and in the commentary from Mr. Deese justified, would you say?
Yes, good morning, Youssef. I do think there is an uptick to some extent in consumer sentiment. We've seen this in the University of Michigan index, but we've also seen yesterday the earnings reports from these retail behemoths. So yes, as inflation seems to be peaking, what we're observing, of course, is that for American households, you have the erosion of real purchasing power is coming to a halt because the month-on-month inflation is stagnant or may even be declining as gasoline prices keep falling. And that means that the long process of where month by month by month American households were having less real purchasing power in their pockets is coming to an end. That, I think, underpins much of the resurgent optimism, which I hasten to add, maybe somewhat exaggerated, because I'm still looking at a pretty difficult economic environment for the U.S. in the next 12 months or so.
Moritz, how do we prepare for the Fed minutes tonight? Is there a particular playbook you like to lean on? What's the guidance?
Yeah, you would normally just try to look and gauge whether you find more information about the relative hawkishness or dovishness that happened in the discussion. But I think this time it may be sort of less interesting than in the past traditionally for two reasons. One is that we have seen potentially the peak of inflation since that last session happened. And also what Chairman Powell made quite clear in the press conference and afterwards is that the Fed, similar to the ECB, has pretty much thrown out the forward guidance instrument out the window. And I think it was about time that they did this. So whatever the discussion at the previous meeting may have contained, if they now say we go meeting by meeting by meeting, so clearly the incoming data will become much more important. And by the time the Fed will meet next time, we will have had another reading on inflation. We'll have another reading on the labor market. I think those will be much more important to guide the committee members' thinking than whatever we can glean from the last meeting's minutes.
Here's a story on the move, and that is around natural gas. Yes, it's gone stratospheric in Europe in terms of price action, but that's now expanded beyond the European mainland into benchmark contracts in Asia, a 14-year high for U.S. natural gas contracts. To what extent is a scenario of prolonged natural gas prices priced in correctly in some of these risk benchmarks?
This is the biggest risk to the world economy and especially to the European economy. I mean, you've been showing repeatedly now the chart on natural gas prices in the US, but you don't really want to see the one in Europe. We now have gas prices 10 times the level from before the war. And clearly this will be a major drain on the purchasing power of consumers in the region. So gas is a little bit more complicated than oil, for example, because it's less fungible. It's pipeline transported. So it is not as easily shifted around the globe. So the bottlenecks and the discrepancies between different regions are huge. So, you know, as time goes by, these prices will moderate, but I don't see them going anywhere near the levels where they have been before the war.
I mean, with that kind of macro backdrop we discussed, and I fully appreciate that your day-to-day is economics and not necessarily asset allocation, let alone any conviction call in equities. But I'm going to just take my best shot here, because that's the question the Markets Live team is asking, and it does speak to a story of financial conditions. Is the next 10% going to be a move higher or lower for stocks? What will it mean for other risk assets?
Well, we think there is space to watch out for below on the stock market. What we have seen in the last rally, in the last couple of weeks, I think got a little bit ahead of itself. We are still looking at an environment where recession is almost certain in Europe and quite likely in the US. So we have been soothed by an earnings season which has been relatively benign and surprised many on the upside. But this is also a backward-looking indicator. We would expect, as the economy continues to slow, that also the valuations of companies will go down. However, we will probably not test the depths that we've had in the past, and we should see a stabilization at the very latest, sort of about the turn of the year. But sort of in the near term, next 4 weeks or so, 6 weeks, I think there is a significant risk of a correction downwards.
Moritz, this has been very, very interesting. Thanks for making the time. I know you've got to run. That's Moritz Kramer. He's the chief economist at LBBW. We still have much more to come on Bloomberg TV. This is Bloomberg.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Strong enough enough to stay. We will never.
Even with Bitcoin down nearly 50% since the start of the year, the Kraken CEO, Jesse Powell, says he's staying bullish on crypto. That much you would expect, but he spoke exclusively to Bloomberg about his outlook for the market.
In terms of the liquidity in the market, I think that the retail investors have maybe pulled back a bit from where they were 6 months ago. I think a lot of great reasons why. I think the macro environment is really tough right now. Inflation seems to be, out of control. We're by all measurements in a recession here in the United States. So that's to be expected. Obviously, when people have more discretionary income, they're making more investments. I think right now they've been worried about the price of gas and the price of the living expenses.
So Jesse, at the end of 2021, it was trading more around $46,000. Today, it's trading south of $24,000, which maybe could buy you a Honda Civic. What's your outlook now?
I wasn't expecting all of this craziness in the macro environment. However, I'm still hopeful that I'll be able to buy a Bugatti by the end of this year for 1 Bitcoin, but I wouldn't hold my hopes out. Would you even want to pay for the gas for such a car at this point? So, I'm still very bullish. I bought in Bitcoin again at 18,000, so I'm happy to ride it all the way back up. I'm still very bullish in the long run. The fundamentals keep improving, so I would never bet against Bitcoin.
The Kraken CEO, Jesse Powell, speaking exclusively with Bloomberg earlier. I want to get to some of the Middle East stock markets, get you a snapshot, finger on the pulse, because we saw quite a little bit of momentum to the upside on the Dubai index, 0.5% specifically. Real estate plays in focus, a little bit of downside in Abu Dhabi. Saudi Arabia was flat on the day. We had some corporate specific news that still drove quite a bit of the price action in consumer discretionary. Let's shift gears and get to the commodities market, specifically to zinc, because we saw a surge in the metal, and it came after one of Europe's largest smelters said they're going to halt production next month with the continent's energy crisis threatening to hobble some of the heavy industries. At the moment, intraday, we're up about 2.8%. This is on the Singapore contract, but of course on the London Metal Exchange as well, another important benchmark. We saw price gains of as much as 7.2%, which would have been the highest intraday level in about 2 months, because the market's also bracing for a broader, tighter supply narrative there. From zinc, I take you to equity futures in the United States, looking for direction as we count down to the Fed minutes. We're pretty much as flat as a pancake. Much more ahead. This is Bloomberg.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
The top names at the Fed are on Bloomberg.
I have a baseline case going into September that is 50 basis points. That's where I've been since the last meeting. But I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
This is Bloomberg Daybreak Middle East. Our top stories this morning. A more hawkish than expected message from the Reserve Bank of New Zealand as it hikes by 50 basis points. Now markets wait for clues from the latest FOMC minutes about what the Fed might do next. President Biden signs a sweeping tax, climate, and healthcare measure into law, a major legislative victory for Democrats ahead of the November midterms. Oil is trading near a 6-month low amid headwinds, including Iran and slowing global economic growth. We're live to the OPEC headquarters in Vienna in just a moment ahead of our interview with the new Secretary General later. And we get the passenger numbers from Dubai Airport. Shortly, we'll bring you the details and speak exclusively to the CEO, Paul Griffith. Let's circle back to the market action in Asia. Juliet Saleh has all the critical coverage from our Singapore studio. Jules?
Hey, Yusuf. Yeah, certainly watching the fluctuation in the Kiwi. We did have that big spike initially after the 50 basis point hike, the fourth from the RBNZ taking their cash rate to 3%, the fourth in this cycle. But you are seeing a little bit of fluctuation now and a little bit of weakness coming through in Kiwi stocks as well. More broadly, though, it is a positive session for Asian equities, holding near a 2-month high. You can see Japan really leading the way there. Exporters rallying on that yen weakness. The Nikkei up by about 1%. We had data out here in Singapore too in terms of non-oil domestic exports. They rose by 7% in July. Electronic exports up by 10.3% year on year. And we're continuing to watch the relationship with the Aussie Kiwi as well after that RBNZ decision. And of course, the divergence between the RBNZ and the RBA. The Aussie against the greenback down by about 1/3%, but still holding above 70 cents, Yusuf.
And then a day of reckoning for Tencent in the meantime. Tell us, what are we expecting to hear from the internet giant? It's just so much at play.
Yeah, well, exactly, and this is really going to show just the impact of these COVID lockdowns and how that has affected Tencent's online gaming stream and, of course, advertising revenue as well, as we are expecting it to post the first negative quarter revenue. And you can see that significant downside momentum that is expected, this negative growth of 0.1% for the quarter versus what we saw when the pandemic first, kicked off, when you had 29% growth in third quarter 20. So this is just very much showing the impact of these lockdowns. Let's have a look in terms of what we are seeing from Tencent's share price. We were talking earlier about how it's underperformed some of its peers since the mid-March intervention. And analysts' earning forecasts for the internet giant have fallen over 23% from their peak in 2021, when Tencent then was on the cusp of becoming Asia's second $1 trillion company. The stock's forward PE ratio now near its lowest on record as a public company, but still use of some very bullish calls out there. 64 buys, 5 holds, 3 sells when you look at the A&R function on the Bloomberg. Yusuf.
Yeah, I mean, with that kind of PE ratio, especially in comparison to some of the U.S. peers, a bargain, possibly. Jules, thank you for that. That is Juliet Saleh. Let's get to the commodities play, because oil is up slightly this morning after tumbling to the lowest in more than 6 months yesterday. It came as investors weigh the prospect of Iran coming back online and weakening global demand. There are just some of the headwinds facing the new Secretary General of OPEC. My colleague Manis Krani, who hit the road earlier this week, is going to be speaking to him later. He now joins us from Vienna. Manis, you made it out, of course, when the weather's perfect and everything kind of falls into place. So tell us a bit more about what's been driving the oil price lately.
Yusuf, look, you and I have covered it. There's a palpable sense of fear manifest on Monday and Tuesday on the back of the Chinese data. That's just the latest flesh wound to sentiment. So we seem to have evolved past demand destruction when oil was trading up at $130 all the way back. Now we're in some kind of a new zone where the demand globally could be fracturing, and hence the reason why you're seeing these lurches to the downside, which takes us to a backdrop here at this institution for Haytham Al-Gaith as he shepherded in the smallest increase in production since 1986. Grant Smith, who's here with me on the trip, called it astute. Maybe, you know, hindsight's a great trade, isn't it? But really that sort of small token gesture is something that gives them, I think, maximum optionality. There's no doubt about it. US production's at the fastest in 2 years, Yusuf. And Dennis Gottman says smart money leaves its footprints in the time spreads, and they're contracting, which says there's less constriction in this market, but a hugely volatile week and 6 to 8 months for this organization.
We've spoken many times on this show about the gap that was left by the passing of the Secretary General Mohammed Barkindo. It feels like it just happened yesterday, but of course time flies. I mean, what is going to be the top priority here for the new Secretary General?
I think it's about unity. If you take your mind back just over a year ago, and it wasn't that long ago that the Saudis and the Emiratis were quite literally at verbal loggerheads on Bloomberg TV about, we want higher production quotas, we want our baseline off a new level, and they slugged it out. So Saudi Arabia and the Emiratis, you know, barely a year ago were at loggerheads. But this Secretary General needs to shepherd, so to speak, all of the nations, not just the 5 that got the production and baseline uplift, but reach out to the Africans, make sure the communication lines are open to the Americans and the non-OPEC members. That, I think, is what is paramount for this new Secretary General. Of course, he is somebody that brings a huge swathe of experience with him to this job. I think it's about unity.
What about his background in a bit more detail? I mean, to be honest, I didn't know much about him until he was nominated and confirmed for the post of Secretary General. What does the oil market make of it?
Well, not only was he nominated, but he was completely sort of unopposed. So it was almost like an elevated kind of position in terms of, it wasn't just unanimous, but it was literally unopposed by any nation. Nobody else was put up. I think when you look at his background and you talk to people who know him, he's somebody who's traded oil. He's been in the trenches of oil trading for 10 years. He's done the upstream, the downstream, the politics. He's lived in China for a number of years, doing the marketing for KPC. He's advised 6 oil ministers. So he's not a newbie either here at this organization or indeed the politics of OPEC. He served as the governor for OPEC between 2017 and 2021. And as I said, he was appointed by acclamation. I encourage everybody to go off and have a look at the word. Acclamation is something much more substantial than just a majority. So one oil person said to me, this is a Secretary General who understands more truth than he dares speak. So he's a man of numbers, a man of precision, and a global operator.
Yep, that's going to be a lot to factor in. Manus, you're going to be, of course, across many of the discussions on the ground in Vienna. That is Manus Cranny there. Clearly doesn't miss being alongside with me here in the studio. But let's get you a breaking line, an update from Elon Musk, because earlier there was a little bit of speculation that what he implied on Twitter about buying Manchester United wasn't just just kind of playing around a little bit with some words. And now he is confirming that he is not actually buying any sports teams. So this is not happening, even though he did mention it earlier and it triggered quite a bit of speculation. So now Elon Musk saying that he is not buying any sports teams at this time. Let's get to another sports front, because the Saudi-backed Live Golf League is facing off against a new group of opponents in the U.S. State lawmakers from New Jersey that aim to ban the league from clubs in the state. Simone Foxman has more on this. So Simone, what exactly is entailed in the proposal? What have you seen?
Well, this isn't just targeted at Live Golf League. It's actually targeted at any contest from a sports organization that's primarily backed by a sovereign wealth fund. That said, the 2 state senators that did introduce this bill, they are specifically targeting Saudi Arabia and the Live League. They pointed both to current purported human rights violations, as well as the involvement of many Saudi nationals in the terrorist attacks of 9/11. You know, important to note, that this is progressive pushback to Saudi Arabia in a very progressive state, and this, of course, introduced by 2 Democratic state senators. We don't necessarily get the sense that this is filtering into New Jersey's broader federal viewpoint, notably Bob Menendez, the chair of the Senate Foreign Relations Committee. He's from New Jersey, and he recently supported the continuation of arms sales to Saudi Arabia. That said, there's clearly concern about sports washing. This is a liberal and progressive talking point that only continues as we see Live Golf League go on. I wonder, do we see similar protests occur at an early September event that's in Boston, also part of a very liberal state there, Yusuf?
And then on a different political front, this one in Iraq, because the crisis there is intensified, and then most recently with the resignation of the finance minister, Ali Alawi, where do we go from here?
Yeah, Alawi citing the rampant conflict between political parties, which inhibited the implementation of reforms. We really haven't seen any slowdown in the protests by supporters of Muqtada al-Sadr to the ongoing political situation. Remember, they occupied parliament late last month. They continue to protest. Al-Sadr had won the most votes in the last election, but had failed to be able to form a government, and now is calling for the dissolution of parliament and new elections. The current caretaker Prime Minister, Mustafa al-Kadhimi, he's calling for rival groups to get together for a dialogue today. We'll see if there's any progress there. But from a market front, we're also watching something else. U.S. senators saying that energy companies are concerned about their continued access to natural resources in Kurdistan. There have been a series of Supreme Court decisions in Iraq about where exactly this Kurdistan oil supplies go. Clearly a lot to pay attention to right now in Iraq, and a lot of uncertainty there, not just for the country and its political situation, but also for markets.
What about developments around Iran? Because there are signs that it could return to the 2015 nuclear agreement. What's the latest?
Only incremental developments here. The U.S. saying that it was mostly on board with the EU text, this sort of final agreement that they had put forward, and it was now considering Iran's response, which came late on Monday night, to that text, seeing if it can go along with some of the things that Iran is demanding. Goldman Sachs put out a note saying that they would expect a 2023 return of Iranian crude supplies if we did get some kind of agreement here to the tune of 1 million barrels per day. But analysts there cautioning that they still see a revival of the Iran 2015 nuclear deal as unlikely in the short term. That echoes the general skepticism we've seen from strategists and analysts who follow this ongoing discussion.
Simone, thank you for the recap. That's Simone Fox with Qatar Financial Center in Doha. We still have much more to come. Equity futures in the U.S. going nowhere. We are flat at the moment. This is Bloomberg.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
You will put a woman on Mars. You will bring forth global cooling. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
A steady surge of growth throughout the second quarter has propelled Dubai International Airport's half-year nearly traffic to 27.9 million passengers. That's just 1.2 million shy of the airport's total traffic for the whole of last year. DXB achieved a milestone that's despite significant reduction in capacity resulting from the 45-day closure of the northern runway. And that happened last summer for a major refurbishment project. The Dubai Airport CEO, Paul Griffith, joins us now on the set. Paul, a lot of momentum here in sort of the first half. I mean, what I'm wondering is how sustainable that is going into the back end of the year, whether that's going to continue.
I think it is going to continue, Yusuf, and I think we've seen 161.9% growth year on year for the first half. We had something like 10.6 million passengers for the first half last year, so it's an enormous surge. And I think as the transfer markets recover, which is the last remaining market really to come back, we're going to see sustained growth throughout the rest of the year. We've had to revise our forecast for the year up yet again. We're looking at something like 62.4 million for this year, so won't be long. We're 87% back. Hopefully during the course of next year we'll be back to the pre-pandemic levels that we enjoyed before.
Dubai airports and the airlines in the UAE benefited a lot from the COVID disruptions around the world because they were able to manage a relatively smooth experience and stay open more than others. I'm wondering whether that tailwind has begun to fade a little bit.
Not in the slightest, because Dubai is more popular than ever before. As you rightly say, during COVID, I think the vaccination program and the government's program to keep Dubai open with all the safety measures in place that we adopted very early on bore a huge amount of fruit, with the number of people coming to Dubai exceeding pre-pandemic levels. So we were 111% ahead of the point-to-point traffic by the end of last year. And I think that's going to continue.
There's a lot of concern about the Fed hiking interest rates and driving the economy off a cliff. Dubai is integrated into the global financial infrastructure more than other places in this part of the world. Are you taking any steps, preparing in some way for a potential slowdown? What are you seeing in the numbers?
Well, I think every single business around the world would be well advised to take stock of its operating model, look at its costs very closely, and make absolutely sure that it's prepared for, bumpy waters ahead. But I don't think that should dent our confidence in travel. We've seen what happens when you put 2.9 billion people under some form of lockdown over a 2-year period, and people are absolutely determined to travel. What we're seeing now is huge demand, and we can't get enough aircraft into the air, it would seem. There needs to be more capacity because lots and lots of people around the world are desperate to travel.
So clearly there's a lot you want to do, and you've got the demand at the moment working in your favor. Where is the bottleneck then? Because that's something a lot of CEOs that I've been speaking to have been pointing out, is that there is one part of the supply chain where it's particularly painful, particularly difficult. Where is that part?
I think that part generally is resources, particularly human capital. The difficulty I think a lot of airports around the world are experiencing is that they cannot recruit or re-recruit enough people to man all the various processes in the supply chain. We've been fortunate, we've avoided that by sourcing labor from all around the world, as Dubai always has done, and I think we've been able to avoid some of those bottlenecks that you've seen at other airports around the world.
What about the World Cup? We're not far off. I can't believe it's been 10 years since we got the announcement, and now we're about to start the opening match. What's going to change for Dubai airports? Maybe you're going to bring more capacity online from the newer airport on the other side of the city. What's the game plan?
The game plan actually is to operate a series, and when I say series, I mean a big series of flights from DWC, Dubai World Central, Al Maktoum International, to the south of the city. So there's going to be shuttles backwards and forwards between Doha and Dubai. And a lot of people, I think, will choose to stay in Dubai and visit Doha Doha for each individual match. We're looking forward. It's going to be a very busy time, and we're putting some very special arrangements in place to make the travel easy for everyone.
What are your numbers guys suggesting on what you could get of an additional bump in passenger traffic? I mean, you have probably a team that's looking at different scenarios. What's been some of the more conservative takes on how many more people are going to come through here?
Well, it's a little difficult to say, but some of the advanced planning that we've seen where airlines are filing slots at the moment for DWC looks as though that program could be quite ambitious. I can't give you any actual passenger numbers until we've actually made the projections into something that's really real, but I think it's going to be very lively, and I think a lot of people will have a great experience coming to Dubai, staying and enjoying everything Dubai has to offer, and then visiting Doha for the World Cup.
Is anything going to change on the mask mandate front? Because Dubai's been a bit at the forefront of embracing doing things a bit more differently. I look at Abu Dhabi, they're still quite conservative in their approach to mask mandates. You can't really go around without an app and without being, recently boosted or having a basically COVID vaccination certificate. Is anything changing as far as you know? Maybe more relaxation?
Well, obviously, we've seen an end to testing for travel to most places, which has been very welcome. And I think Dubai was at the forefront of dropping that. The Dubai government actually has got a track record of calling these things extremely well. And we have to get the balance between personal liberty and safeguarding health absolutely right. But I wouldn't be surprised if there was a call to end masks, but obviously that depends on the health data.
And closing question on the trend we're seeing here, there is a mandate from the government to bring more government-owned entities and bring them onto the Dubai stock market. It's part of a comprehensive reform package, and a lot of household names in Dubai have done their IPOs, so be it DEWA or TCOM. I look at Dubai Airports, kind of stands out to me as one that is the logical next frontier. Are there any active discussions at all at this point?
Airports around the world actually are quite attractive utilities, blue chip utilities for IPO, but clearly that is Dubai government's decision, and we await news on that front. Haven't actually got anything being talked about or planned at the moment.
Okay, so it doesn't sound like a yes just yet, but we will
that's
check.
Probably right, yes.
We'll check back in with you on a regular basis. Paul, fantastic catch up. Thank you for that. That's Paul Griffith. He's the Dubai Airports CEO. So much more to come on the show. This is Bloomberg.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
So for somebody who's watching this and wants to be a successful global business leader, what are the skill sets?
I would prepare well before I got the job or was given the nod.
Is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
Andrew Liveris, the Lucid Group chairman and board president for the Brisbane Olympics, says they're committing to a net zero cost to taxpayers for the 2032 Games. He spoke with David Rubenstein about challenges of planning for a global sporting event.
I've spent some good time with the LA 28 people, Casey Wasserman and his team. Of course, the Paris 24 people. Spending time with Milano Cortina, which is 26 winter. I'm spending time with the Salt Lake people who are trying to win 2030 Winter Olympics, if not that, 2034. They organized, of course, the Salt Lake Olympics that had occurred already under Mitt Romney. And I've learned a lot about what makes Olympics work and what makes Olympics fail. And one of the most important things is something which is near and dear to my heart, which is planning and front-end loading. That's an actual term in engineering, FEL. Front-end loading means I've got to get all the work streams and then project them forward and then staff to solve those work streams ahead of time so I can implement and not change the plan. So we have the luxury of 10 years, but actually most Olympics get 6 years. These 3 to 4 years ahead of the 6, when we're in full-on mode, is all planning. With the governments, with the organizing committee, the IOC, all of that.
Is this designed to make money or break even? How do you operate?
We have committed that we will have net zero neutral in terms of costs to the taxpayer and revenues we get. $4.5 billion spend, a $4.5 billion revenue raising target, of which the majority of that is from broadcasting rights. But I have to go fundraise $1.7 billion with my CEO and my team. I'm recruiting the CEO right now. Anyone out there who's interested, please apply. It's on the website. Brisbane2032.org.com, and we have an ability to actually do the fundraising right after Paris. So we get the rights right after Paris is done, which is 2024.
That was Andrew Livers, Lucid Group chairman, also very well known for his long tenure as the head of Dow Chemical. You can watch more from that interview. That's on the David Rubenstein Show, peer-to-peer conversations on Bloomberg Television. Let's get you back to the market action as we count down to the Fed minutes. I mean, it's almost like equity futures are just barely above the flat line, and yeah, no direction until we get the actual minutes in terms of whether the dovishness that has been speculated is going to get firmed up a little bit around the trimming back of expected rate hikes from the Fed, or at least an earlier U-turn as we go into 2023. Seesawing in terms of equities. Walmart really bucked the trend. Earnings beat lowered expectations. And then you're looking at the Bloomberg Dollar Index just barely above the flat line as well. I want to get to a London live shot because we're counting down to UK CPI. May have quickened to 9.8% in July. It's a new 40-year high. This is Bloomberg.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
What about cryptocurrencies? Are you a believer in cryptocurrencies?
No, I'm not a believer in cryptocurrencies, and I would say that cryptocurrencies are a bubble. And I would describe cryptocurrencies as a limited supply of nothing. So to the extent there's more demand than the limited supply, the price would go up. But to the extent the demand falls, then the price would go down. There's no intrinsic value to any of the cryptocurrencies, except that there's a limited amount.
Well, based on what you've just said, why would you not put a big short of some type on cryptocurrencies? Or maybe you have, but do you think that's a good short?
Well, you know, when we look for these subprime, the reason why we shorted these subprime in size is because it was asymmetrical. You shorting a bond at par that has a limited duration that trades at a 1% spread of treasuries. So you can't lose more than the spread in the duration. Yet if it defaults, you can make the par amount. In crypto, there's unlimited downside. So even though I could be right over the long term, in the short term, as the case of Bitcoin, went from 5,000 to 45,000, I would be wiped out on the short side. So it's just too volatile to short.
Strong enough to stay, we will never.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Good morning from Bloomberg's European headquarters. We're at 6 a.m. in the city of London. I'm Danny Berger. This is Daybreak Europe, and these are the stories that set your agenda. No time to relax. Germany's energy regulator says the nation may not have enough gas to get through winter, even as reserves fill faster than normal. Uniper earnings this hour. Meet the new boss. We're in Vienna to speak to OPEC's new Secretary General in his first interview since assuming the role. Haytham Al-Ghais talks oil markets and the biggest challenges facing the producer group. Plus, transatlantic eco, U.S. retail sales and Fed minutes will be scrutinized for hints on the direction of policy. Here in the U.K., how bad is inflation? We find out at 7 a.m. Well, it is a market in conflict between economic data that shows both strength and slowdown, and at the same time, retail big box earnings in the U.S. that outperformed. That helped to lift equity markets yesterday. We saw Home Depot, Walmart, all of those rallying. Walmart the most since 2020. MSCI Asia Pacific, that moving higher, up 0.7%. We'll get 10-cent earnings later. Also, Euro Stoxx 50 futures, those up 0.5%. S&P 500, that just barely positive. Future session did start negative. We had home buyer data yesterday, house building, that slid, but still, how much does this economic data matter? We are getting Fed minutes later today. We're also heading in to Jackson Hole in a few days' time. Now, if we flip up the boards, you see New Zealand continuing to lead the hawkish push, raising rates by 0.5% for the fourth straight meeting. Now, yields only up 1.5 basis points. At one point, they were up as much as 8 basis points. So we've had a bit of a retracement there. Hanging tight when it comes to sterling, up 0.2%. UK data on deck for inflation. Also looking at Bitcoin, that's back above $24,000. So perhaps a little bit of risk on showing through there. And Brent crude, that's up 1%, but still below $94 a barrel. It is trading just about its February low. Now, let's stay with that oil market story. And it has been a turbulent time, both supply, demand in question. For the answers, really for all answers, but especially the oil market, Manus Craney is going to be in Vienna. He is in Vienna now. He also will be speaking with OPEC's new Secretary General, Haytham Al-Ghais, later today. Manus, great to see you. You're in Vienna. I should say, I counted it. You're only 767 miles away from me in London, so I'm not offended. You're not stopping by, but look, you've got more important people to speak to there than me.
I'm getting closer to you, Danny. It's good to have you back at the wheel. And of course, the cost of jet fuel, it's a bit expensive. So the last 700 kilometers might be a tough one. Look, I think we arrive in Vienna. It's 42 degrees. It's hot. It's humid. Europe is in the midst of one of its worst energy crises ever. Globally, the new Secretary General at OPEC here, Haytham Al-Ghais, is going to face down turbulence in a market this week which has been racked by a palpable sense of fear that China demand is imploding. An Iran nuclear deal could be on the table. How many times have we heard that? But we are closer than ever to a new supply alpha in the oil market from Iran. You have a crumbling of demand. And then you have, it's my sort of pet phrase, prescient optionality created by OPEC. Maybe I'm being too generous, but this institution delivered the smallest increase in supply since 1986, 0.1%. My view is that they want all options on the table. Yes, they had politics at play from the United States of America, perhaps a little bit of pressure there and tokenism with 100,000 barrels. Or was it astute, as our print colleagues say? I think we've migrated from demand destruction at around $139 on WTI and $5 at the pump in your home country to something which is much riskier. It's much, much riskier. This is about a new phase of demand, either implosion. I don't know, but we'll put those questions to the new Secretary General. He's a man with swag. He's done the upstream, the downstream, a multilinguist, a man who spent time in China marketing oil for Kuwait. We'll catch up with Haytham El-Gaith later today.
Really looking forward to that conversation. Manus, you know the show can't run properly without you, so of course you'll be back throughout programming. Manus Granny there, our co-anchor in Vienna. Now let's get to our other reporters who are around the world. Stephen Stupczynski is going to bring us the latest on Germany's gas crisis. Juliet Sally has the RBNZ rate decision. Then we're also going to hear from Dan Moss on what to expect from the Fed minutes out later today. So starting with that energy story, or rather continuing with it, Germany is racing to fill its nat gas stockpiles, but the country will still struggle with having enough fuel to get through the coming winter. Let's get to Bloomberg's energy reporter, Stephen Stupczynski. So this new report out that they have less than 3 months should Russia cut off the gas flow. What does this mean for Germany in terms of preparing for the winter, be it stockpiling that gas or what it says to industry and households?
It means that if Russia cuts off supply, there's essentially going to be gas rationing. It's unstoppable, according to this report. They only have 2.5 months of gas. If they fill their gas supplies to 95%, well, 95%, you can't get higher. Well, you can't get to 100%, but it's very difficult to get higher than 95%. But then the clock starts ticking. So from November 1st, if they don't have any supply coming in from Russia, and they just depend on those inventories, that will run out in 2.5 months. It will be very challenging to get through the winter, and it will be hard to keep industries supplied. So you're going to see a slowdown in economic activity. You're going to see a risk of factories or supply chains getting jammed, and you're going to see, it's a very small risk, but a risk of even households perhaps not getting gas. So it's going to be a very challenging winter if Russia does actually cut total supplies to Germany, which is not outside of possibility. So it is something that the government is worrying about quite a bit.
Right, and of course, Germany power and France power already at record highs. Stephen, thanks so much. As always, Bloomberg's Stephen Stupczynski there. Now, the Kiwi is fluctuating after the RBNZ hiked rates by another 50 basis points. Let's get the reaction from Juliet Sally in Singapore, who correctly says RBNZ, unlike me. Jules, what are you looking at?
Danny, I thought we'd taught you that last month. Yeah, well, certainly we had this 50 basis point hike, and that was the fourth straight move, bringing the official cash rate to 3%. But it was a slightly more hawkish tone as well from the RBNZ, suggesting that they see the official cash rate now peaking at 4.1%. So that's up from their prior growth of 3.95%. And Adrian Orr in the press conference also striking a bit of a hawkish tone, even though he announced, of course, and alluded to the fact that these higher prices are going to start to hurt household spending. Let's flip the board and have a look at what we're seeing in the currency reaction. You mentioned the Kiwi fluctuating. It did initially spike higher against the dollar and the Aussie after this rate decision, then gave back some of those gains, but now we're up by about 0.2%. Certainly seeing weakness in the Aussie against the Kiwi too, although off its earlier lows. Traders saying that this pair was started to sell out before the decision, and also on the back of a slight miss on Aussie wage data. Elsewhere though, it is a 2-month high for Asian stocks, so we're seeing some pretty good gains coming through, and we're looking ahead to the big one, decision day for Tencent, of course, expecting to see it post its first ever quarter of negative growth. Also waiting to hear an update on that Reuters report that it could be selling its Meituan stake, and analysts have actually slashed their forecasts for Tencent earnings down about 21% from the peak in 2021. Danny.
Jules, thanks so much. Bloomberg's Juliet Sally there. Now to the U.S., where retail sales data in the minutes of the July Fed meeting are due out today. Now, they should provide fresh clues on how far interest rates might be raised in this cycle. Joining me now is Dan Moss from Bloomberg Opinion. So, Dan, I feel like the lens that we're looking at all this data is, will the dovish pivot materialize, especially when it comes to the minutes? I mean, are we likely to get any signs of that, or are we just dealing with a Fed who's going to batten down any hint of that?
Well, firstly, I'd be surprised if there's any mention of Manus's new term, prescient optionality. I wouldn't look for that in the minutes. It's important to remember that this is a record of an FOMC meeting that transpired 3 weeks ago. They're unlikely to deviate much from Jay Powell's tone at the subsequent press conference. But you're right, there is this kind of tug of war or disconnect between markets which believe that peak hawkishness has subsided and Fed speakers who are saying, well, hey, we never said we're done. Who said we're done? We never said that. You know, somewhere there's some middle ground there. You know, if the Fed has overtly shifted to data dependence, then a lot of data, not all, but a lot has been on the soft side. So what data are they watching? And it doesn't have to be a dovish pivot, to be a pivot of some kind.
All right, Dan, thank you very much for teeing us up for the U.S. data out later today in the Fed Minutes. Dan Moss from Bloomberg Opinion. Now, speaking of which, let's take a look at some of the key things that we're going to be watching out for today. In just under an hour's time, we're going to have UK CPI inflation. That's expected to have accelerated again in July to 9.8% from 9.4% from the month prior. 1 p.m. UK time, it's 10-cent second quarter earnings. Juliet Sally was just talking about that. Cisco, Lowe's, and Target, they're also reporting today. We're also going to have U.S. retail sales, 1:30 p.m. UK time. That will be followed by business inventories. Finally, 7 p.m. UK time, as Dan was just discussing, investors will get the minutes from the Fed's July meeting. But first, coming up on the program, from apocalyptic to patient bears, we're going to discuss changing investor sentiment with Anika Gupta of Wisdom Tree next. Plus, President Biden has signed a sweeping tax, climate, and healthcare measure into law. We're going to get more on that story later in the hour. This is Bloomberg.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now, the US and Europe are answering back with their own infrastructure initiatives to counter China. But African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
Welcome back to Bloomberg Daybreak Europe. I'm Danny Berger in London. Now, investors are pulling back from their record pessimism about stocks amid speculation that inflation has peaked. That's according to the Bank of America's monthly fund manager survey. The bank strategists are now patient bears with their base case for rising rates and falling earnings. Joining us now is Anika Gupta, research director at Wisdom Tree. So we have that survey there showing that, okay, yes, investors still very bearish, but perhaps not as extreme as they had been in the month prior. Have we seen a turning point in this market?
Well, I would say it's a turning point. I think I think what's really happened is we've seen this bear market rally transpire, but there's been some three important pillars that are supporting it. The first being we've seen better than expected Q2 earnings season, we've seen an easing of financial conditions, and then we've seen the all-important data print that every central bank across the globe is fighting for, which is inflation start to peak in the world's biggest economy.
Right.
So I think markets are holding on to that hope that we could get the Fed pivot from this point on. But the reality is we're also getting a lot of weak economic data coming in, and I think that's reflecting the fact that is the balance going to weigh more in favor of addressing the weaker growth, or is the Fed going to still continue on its path of being hawkish on inflation? And obviously recent Fed speak is suggesting that they're going to be a lot more hawkish, but I think time is going to tell as we come up to the next two key prints between the next September meeting.
It does feel like a Fed who's trying to push back against that pivot narrative, that you've had Fed speakers come out and say, look, we're still geared in on inflation. So that being said, I mean, we have Jackson Hole coming up. Are you looking at this as a risk event? How are you positioning going into it?
I mean, we've tried to analyze previous points, prior to recessionary periods. And what we've seen is the period between a yield curve inversion to the actual recession taking place can span anywhere between 6 months all the way down to 18 months. And between that time, yes, we all know that yield curve inversions lead to recession, but since the point of a yield curve reversion, it also leads to a positive equity market performance. So that history is telling us what we're seeing has happened in the past. It's not saying we're avoiding a recession. It's very much saying it is a bear market rally. Enjoy the ride while it lasts. It's going to end soon.
Yeah, that is interesting because people have said, okay, it's so illogical the fact that we're rallying now, but perhaps history does back it up. So that's the U.S. story. In Europe, I was really interested by your research essentially saying that if you strip out energy, you strip out banks, earnings surprises have been negative in Europe.
Yes.
Is that the worst of it? Does it deteriorate from here? Because obviously Europe's inflation is imported. It's much different than the U.S.
Absolutely. So if you strip out energy, you are getting a negative beat on earnings versus expectation. But I think what investors should realize is there is a bifurcation taking place in the market, and that bifurcation is between the domestic companies and the European companies that have more international exposure. So when you compare the two, that's where you see the impact of the weaker euro, because you're seeing all of these currency translations take place, strong dollar versus weak euro, and that's been benefiting these multinational companies based in Europe. The second important factor is, yes, we've had a high inflation. It has been a headwind for equities, but on the flip side, it's important to note that these very companies are using European economies so far.
Right. Well, when you look at, for example, Germany yesterday saying that there'd be a levy on consumers for high energy prices, corporates can pass those along to the consumer itself. Of course, previously Germany tried to step in to prevent that from happening. What does that do to the consumer and to pricing power going forward and their willingness to pay up for these products that companies are charging more for?
It's going to be very difficult, Danny, because you're looking at electricity prices now hitting a consumer. These contracts that these consumers have signed up for are now starting to expire. So once these contracts expire, they're going to be hit with electricity prices, which is nearly 5 times, 6 times the original bill that they were facing. So it's going to be a big struggle as we enter into the winter period, which is why we would say with more certainty that Europe is entering into a recession by the end of the year, and consumers are going to struggle in this environment.
Now, there has been optimism in terms of translating into equity markets, the decline in oil prices around a February low. It does seem like some of what's contributing to that is optimism around an Iran nuclear deal. Now, Goldman Sachs, they're out with a note saying essentially this will take time. It's not likely to happen in the near term. For you, what year is this a story for? Is this a 2022 story, or does it get pushed further out?
Well, history tells us that the last time we had
the Iranian deal actually signed, it took a year and a half for production to actually come back online. So, you know, I would agree with that view and say that it is a headwind for now. It is weighing on sentiment in the oil markets, which is also being, drawn down because of weaker demand, especially coming out of China, as we've seen in the latest economic data. So that is definitely having an imprint. But I would say it would be a story of second half of 2023. Really.
Okay. Anika, great to catch up with you this morning. As always, Anika Gupta there, Research Director at Wisdom Tree. Now coming up, President Biden signs a sweeping tax, climate, and healthcare measure into law. We're going to get more on that story. This is Bloomberg.
This month, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th, only on Bloomberg Television and Radio.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. I'm Danny Berger in London. Let's get to the first word news. With that is Juliet Sally in Singapore. Hi, Jules.
Hey, Danny, Germany will struggle to have enough fuel this winter if Russia cuts off supplies. Even if inventories can meet the nation's 95% target by November, that would only cover around 2.5 months of heating, industrial and power demand. That's according to the nation's energy regulator. The risks of energy rationing in Germany are still high. Rishi Sunak has ruled out freezing the UK's energy price cap if he becomes Prime Minister. His rival Liz Truss has warned against throwing money at a short-term fix to the problem. Labour leader Keir Starmer this week announced he'd freeze the cap on energy bills instead of allowing it to rise again in October. Chinese Premier Li Keqiang has asked local officials from 6 key provinces to help bolster growth measures. According to CCTV, Li held a meeting in Shenzhen with provincial officials, asking them to help boost consumption and offer more fiscal support via government bond issuance. Li reportedly acknowledged pressure from COVID lockdowns and told officials to strike a balance between virus control and economic growth. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Danny.
Juliet Sally in Singapore there. Thank you so much. President Biden has signed a sweeping tax, climate, and health care measure into law. Now, it's a major legislative victory for the Democrats ahead of the November midterms. The bill changes the way medicines are priced and adds a minimum 15% tax for corporations. Biden says the Inflation Reduction Act is the biggest commitment to mitigating climate change in U.S. history, containing some $374 billion of provisions.
The bill I'm about to sign is not just about